So a quick review what we did last time. We did a covered member, very important term in an audit engagement, because a covered member is anyone who is on the engagement team, but it also includes those who can influence the audit engagement without being on the team, including maybe staffing people who may have put you on the engagement and could take you off the engagement. They're covered members too. And the firm itself is a covered member. And the reason why it's important to know who's a covered member, one of the reasons is they can't have a direct financial interest. They can't own even one share of stock in the audit client. If they own even one share and they're a covered member, then they're not independent. So the member of the engagement team would either have to sell that one share or more, whatever they held, in a direct financial interest. So if you're doing the Walmart audit and you own one share or more directly, you'd have to sell it, or you couldn't be on the engagement team. Now, obviously, if you had a substantial investment in Walmart, you'd have to sell that too. But even one share would impair independence, so says the rule of independence. Because they figured if you could own one share, you could own two. And if you'd own two shares, then you could probably own 5 or 10 and maybe even 50 or 100 one day. So whatever, they just didn't want to get into where the threshold is. So they just decided you can't own any. Not anybody on the team, not anybody who can influence the team, and not the firm itself. What does it mean for the firm to be a covered member? Well, anyone who works for the firm is not necessarily a covered member. You could work for the firm and not be a covered member and be able to own shares in Walmart, even if your firm is doing the audit, as long as you're not a covered member, which means you're not on that engagement team. You can influence the team. As long as you can influence the team and you're not on the team, then you could work for the firm and still own shares of Walmart, even though they're doing the Walmart audit. That's okay. But the firm itself, the firm itself is a covered member. What does that mean? I have it in big bold letters because a lot of candidates don't understand what the firm itself means. The firm itself does not mean anyone who works for the firm. It means the firm, which is the group of partners, the partners as a group. They have a bank account. They use that bank account to pay bills, pay salaries, make deposits, collect fees. They have a bank account for that. They also have another bank account. They have a brokerage account. And whenever they get an extra $5,000, they throw it into the brokerage account and they buy stocks. And they like to invest money that way. And they've been doing very well over the last 20 years. But they can't own any shares in that firm brokerage account of Walmart because they do the Walmart audit, or any companies that they audit. They can't own any shares. The firm itself can't own any shares in the firm brokerage account in any companies that they do the audit for. They can own shares in Target if they don't do the Target audit, but they can't own shares in Walmart because they're doing the Walmart audit. Because the firm itself is a group of partners, all the partners together is the firm. And that firm as an entity, if they own any assets like a brokerage account, they can't have any shares of stock in any clients that they audit. That's pretty much what it says in this last paragraph on 33. If the CPA firm owns assets in the firm's name, like a brokerage account, the firm cannot own even one share of stock in Walmart if they're doing the Walmart audit. Now, they can own other stocks, but not Walmart. And that's because the firm itself is a covered member. So who's a covered member? The firm itself, team members, direct team members, and anybody who can influence those team members. Now let's go to the immediate family of a covered member. So I'm doing the Walmart audit. My wife is not a covered member, but she's immediate family of me, and I'm a covered member. So the immediate family of a covered member, the same rules apply as far as direct financial interest. Can't have any shares. So my wife, if I met her and she had a nice significant investment in Walmart, she'd have to sell that for me to do the Walmart audit. Otherwise, I'm not independent because my immediate family is a counts, you see. I'm a covered member. My immediate family is covered as well as far as the financial interest, the direct financial interest goes. Well, what if my wife only owns one share? Let's say she doesn't have a big investment there, but she only has a few shares. Is that okay? Because, hey, she's not on the audit engagement team. I am. It's still a direct financial interest. And since I'm a covered member and she's immediate family, then she's not allowed to own any shares. She's covered by the same direct financial interest prohibition. But how about this? She doesn't own any shares there, but she works at Walmart in marketing. That's okay. Yeah, I can do the audit because she's not prohibited from employment. Immediate family is not prohibited from employment. Immediate family is prohibited from direct financial interest. Now, can she have any job at Walmart? Is okay? Right. Keep her away from the accounting department. We don't want her having any influence on the financial statements. So she can't be in accounting or in payroll or internal audit. No good. So anything like that, she can't have those jobs. Otherwise, I'm not independent. But if she's in marketing, that's okay. Also, immediate family is not just your spouse, but your children, your dependent children. So my 18-year-old, his first job is at Walmart. He's collecting the shopping carts out in the parking lot. Am I still independent? Yes. All right, let's try number 35. Which of the following would not be allowed to own even a single share of stock in a company being audited? Right, both. Right, whether it's a covered member or a spouse or even a dependent child. Right, what if I have a 4-year-old? Could they own a couple of shares? They're only 4. No, no, doesn't matter how old they are. 38, which of the following cannot work in any capacity for a company being audited by a covered member? That's right. They both could work as long as it's the right job and there's no connection to accounting or financial statements. Both my spouse and daughter could work for Walmart. I could still be independent and do the audit. Now, what's the difference between a direct financial interest and an indirect financial interest? Exactly. Indirect is a mutual fund investment where you own shares in a bigger fund, and that bigger fund has a manager, and the manager chooses the stocks to buy and sell at any given time, and you, the investor, have no say over that. That's allowed, and you can still be independent. You can have an investment in a mutual fund, and that mutual fund owns shares in Walmart, and you're doing the Walmart audit, and that's not a problem automatically. That's judged on a case-by-case basis. That means it may be a problem for one person, but not for another. Why? Depends on how material that indirect financial interest is to that individual. So let's say I have a mutual fund that owns shares in Walmart and I'm doing the Walmart audit. It doesn't matter how many shares I own in that mutual fund. It matters what other money I have. Because if I have enough other money where this mutual fund that owns shares in Walmart, if that investment isn't a big deal as far as my net worth goes, then I'm still independent. But if that mutual fund is all the money I have, then I'm not independent, you see? It doesn't matter the dollar amount of the investment or the number of shares. It matters how meaningful it is to me. So you're not allowed to have any direct financial interest, and you're not allowed to have any material indirect financial interest. But indirect is judged on a case-by-case basis, whereas direct is automatically a violation. Look at 41. Which of the following is correct? If the dependent child owns $300 worth of stock in an audit client, that's okay, as long as the dependent child were under age 5. No, that's ridiculous. Those kind of choices on the exam, when you're getting so frustrated, you almost like root for one of those choices to be correct, because then you can say, maybe, 5 years old, what's the big deal? No, dependent child, covered member, can't own any shares. Number 2, if the spouse of a covered member owns an immaterial, indirect financial interest, the covered member would still be independent. Right. Immaterial, indirect is okay. So now we're going to switch from the immediate family to the close relative. The close relative of a covered member. Now we're talking about your parents. Because if you're not living with your parents anymore, if you're an auditor, you're grown up, you're married, you're out of the house, your parents are not your immediate family anymore. They're a close relative. Same with your brother and sister, and even a grown-up child, right? If you have a child that's not a dependent anymore, the rules are a little different when it comes to financial interest. They actually could own some shares. So I could do the Walmart audit, and my mother could be a Walmart stockholder, and that's probably okay unless it represents all the money that she has, and I'm aware of it, then I'm not independent. So that will be judged on a case-by-case basis because they're not immediate family, they're close relatives. Whether it's your parent or your brother or sister or even your grown-up child. Right? I have a 35-year-old daughter. Now, she works in Walmart and owns a lot of stock there. Am I still independent? Depends on her job. What kind of job does she have there? Does it have anything to do with financial statements? If so, then the same rules apply. I'm not independent. And depends how meaningful that investment is for her. So the employment rules are the same for close relative as they are for immediate family, but the direct financial interest is very different because your parents could have a direct financial interest. They don't have to sell it just so you could do the audit. 45, which of the following situations would affect the independence of a covered member? Yes. Yep. Sister works as a controller. What's a controller? That's accounting. That's out. Spouse works as a cashier at the client. That's okay. 48, which of the following would affect independence of a covered member? Spouse works for the client as an internal auditor. That's going to affect independence. Internal audit is too close to the financial statements. Mother works for the client as a secretary. That's okay. A would affect independence. Number 1. All right, the CPA firm of Rice and Rudy is auditing the financial statements of Dillon Corp. Skip is a close relative of a covered member of this audit engagement. Which of the following would cause the CPA firm to have a problem with its independence? If Skip is employed as head of payroll accounting, that's it. That's it. There's no chance for independence there because it's a close relative and they can't have anything to do with financial statements. Hey, it's Darius. Go to cpaexamtutoring.com and get all 5 sections of what my students have dubbed the Audit Video Bundle. All the videos you need to pass audit. You can buy the sections separately. Each section of audit can be purchased separately, or you can buy the entire audit video bundle for $169, 40 days of access.